What's going on, my friends? It's your man, Adam A. Spencer, with our 1-year dividend portfolio anniversary. Yes, we've been investing in this dividend portfolio for 1 full year as of today. And the best thing about it is we only started with $100. And ultimately, we've just been contributing small amounts, pretty much $25 every week, ever since February 1st, 2021. And you can hit the cars out there. They skating, they excited too. That's what I'm talking about. So, hey, no excuses. If you're someone out there who is balling on a budget, you're like, I don't got no money to invest. We literally started with $100, added $25 every week. I will put a little asterisk right there and say there was 1 week where we invested $500, and that money came from the stimulus check. So anyone who's watching this, pretty much, if that was your excuse at first, I'm balling on budget, I ain't never got no money, you got that stimulus check too, and you could have invested $500 or more if you wanted. But I was trying to be reasonable. I was saying, hey, if someone got this, they tight on cash, they can put $500, $700, $800, whatever, couple dollars towards your bills. I know a lot of people out there, let's be real, decided to splurge with their money. You can look up the reports, see how many people was like, yeah, TVs and stuff like that was gone out of Walmart. So I know people was balling out. That said, you could have put some money in your Roth IRA or some sort of retirement fund or your dividend portfolio, which this could be part of your retirement fund or just another sort of a savings account, in which it's not really savings, because a savings account is going to be getting killed because of inflation and whatnot. As you guys can see in the background, we have the U.S. stock markets in their worst January since the global financial crisis. S&P 500 ends month down 5.3% as investors recoil over prospect of rising interest rates. So, hey, the time, the market has been brutal, right? We all know what it's been. So a lot of people have been like, I don't want to invest, or they sold their stocks, they got out of it. I get it. If you're new to investing, or if you were thinking about investing and then the market has just turned, growth companies have been getting killed, getting slaughtered. And so a lot of people, basically, especially if you're a new investor, and if you're balling on a budget, I get it. You might be intimidated. You might be scared. You might be like, nah, I don't want to do it. However, if you would have started your dividend portfolio with us 1 year ago, or maybe not even a year ago, but ultimately you had a similar portfolio and you started investing with $100 and just contributed $25 every week, aside from that 1 week with the stimulus check, then you can be looking at a portfolio of a current value of $1,994.15. Now, I know you're looking, you're like, wait, what? Over the past day, you're down 0.01%. So I can't be talking all that much smack, but hey, it's not about the short term. It's about the long term. And over the past week, we're up 1.19%. However, over the past month, we're down 3.76%. And over the past quarter, we're down 1.91%. But 1 year, basically all time, because like I said, we started this on February 1st, but I don't think anything actually, the money was deposited, and I think we bought our funds, but the starting value date is February 2nd. So if we go to all time, you can see our return jumps up to 7.93% with a gain of $95.46, which gives us $55.51 in earned dividends. So my friends, my point is, you also can start investing today. I have a link to M1 Finance, which is this broker platform. You can use my link. If you use the link down below to start investing, you will be able to get some free cash that you can even throw in your pie, your dividend portfolio, your growth portfolio, whatever it is you decide to create. Ultimately, you can get more money to start working for you. And that's the beauty of M1 Finance. You kind of set it on autopilot, set it on auto invest. I always have automatically $25 deposited to my account. Any of my earned dividends, once you get again to about $25, your money will be automatically reinvested. So you don't have to do anything pretty much. It's set on autopilot and it's not anything you have to think about. You just got to make sure you have money in your checking account every week where your portfolio is going to be funded. It's that simple. And I know some of you like, well, like I said, I'm tight on cash. I'm kind of broke. All right. Well, if you haven't already subscribed to this channel, make sure you guys subscribe to the channel. Ultimately, I have videos that help you with learning ways for you to make more money, make extra cash or more money, increase your income. Because there's no excuses to not have as little as $25 a week working for you. Don't make your money, your hard-earned cash, and just go and splurge and spend it all every week. Because, the bar might be fun and all this week, right? You're going to have a great time. Life is about living it up. I certainly had my decade or so where I literally would say all the time, live it up. That was my saying. And it certainly was a great experience. That said, I'm sure that money could be better utilized today had I invested it and put it in a dividend portfolio or my Roth IRA, which I didn't have at the time. Little things like that. It would have made a world of a difference. I was living it up. Let's just say that. I was stuck on living it up in the moment and not thinking about the future because, hey, I know things can be, like I said, a little intimidated with this current stock market. But ultimately, do you guys believe the country is going down the drain over the next 5 years, over the next 2 years? Like literally? No, I don't. At least I believe we will be here for as long as any of us, Now, of course, I don't know about the down the road. The world's going to be crazy, I'm sure. Yeah, when it's all said and done, I am confident. I believe in the U.S. economy, the stock market, and I believe in companies like Pepsi, who is giving us a 34.78% return. Procter & Gamble, who's giving us a 27.16% return. Coca-Cola, 26.90. Newt, 22.49. Realty Income Corp, 17.06. Johnson & Johnson, 10.70. JP Morgan & Chase, 0.70%. Verizon Communications, 0.41%. And I even believe in companies like 3M, who is down 12.39%, which is crazy because 3M is a beast. And Innovative Industrial Properties, who is also down 19.09%. Now, I wanted to jump over here really quickly to the first video I made of this dividend portfolio. Unfortunately, it wasn't on the first day I created the portfolio itself. March 13th was the day I uploaded the video. I filmed it, I made it. And I want to point out that AbbVie as well as AT&T are the two companies who are no longer in our portfolio, in my portfolio. That I decided to trade out, get rid of them, and AbbVie and AT&T were replaced with Procter & Gamble, who happens to be basically at our, at the top of our list pretty much. And then also Innovative Industrial Properties, who happens to be at the bottom of our list pretty much. So very interesting. Some might say that was a bad move. Some might say it was a great move. I mean, the fact is you can jump over here and see AT&T 2 hours ago. This article came out. AT&T is getting closer to a clean slate. Here's what's to come next. That sounds like don't sound like things are clean right now. It sounds like it's getting closer to a clean slate. AT&T to spin off Warner Media in $43 billion Discovery Media merger cuts dividend. Oh, this is our dividend portfolio. AT&T stock falls on slashed dividend spinoff of Warner Media stake. And lastly, AT&T, the dividend cut is here 2 hours ago. Again, did I know this was, kind of, you saw the red flags and we knew about this Discovery Media merger and whatnot. Things seemed a little iffy. They've tried to do some mergers in the past and kind of just wasted money. I didn't feel so good about it. I didn't feel confident. I said, let's get rid of them And it obviously was a good move because now you can see the stock has kind of just fallen more, and the dividend cut is here, which we do not want. And that's the beauty of having a dividend portfolio and utilizing a platform like this M1 Finance, where it's so easy to have your pie. Each company is its own slice. We wanted to have a pie that has 10 slices. Each slice, again, is a company. So we have 10 companies in our pie. We could have index funds. We can have ETFs in here. This is a combination of, regular corporations, businesses that we're all familiar with, as well as my REITs, which are real estate investment trusts with Newt and Realty Income Corp, as well as innovative industrial properties, which brings us to this article that speaks to this potentially being a great opportunity, a great buying opportunity while the stock is down. Because I know you guys see it down here at the bottom of my list, and you're like, man, you traded out AbbVie and AT&T for that company who's getting killed 19. They might be doing better than this. AbbVie is doing pretty solid, as we'll actually hear in a moment. But AT&T, yeah, I don't know about all that. And that said, I don't know if AbbVie would have been outperforming Procter & Gamble right now. So I think it was actually a good move that we did. Maybe we could have kept AbbVie, got rid of AT&T, kept AbbVie instead of innovative industrial properties. Maybe we'd be up even higher, maybe not. Either way, I feel good about where we're currently at, and I feel good about continuing to invest in companies that we have in our portfolio, even when they are down. Because yes, IIPR, Innovative Industrial Properties, is down over 30% from its peak. And ultimately, I want to scroll down here. If you didn't know, investors looking for total return in the REIT sector should own a piece of IIPR. A niche property type in cannabis real estate gives them favorable lease terms, which translates to huge funds from operation, share, and dividend growth. I will do a brief update on the valuation. Hint, it's very attractive, under $200. However, instead of a breakdown, blase, blase, blah. And I just want to scroll down. Again, I will have a link to this article down in the description area if you want to come here and read the whole thing, check out this whole article. But I just want to come down to the conclusion, because it says investors have to decide what their own risk tolerance is. There are certainly risks with owning a REIT like IIPR, but I think the upside potential is enough to outweigh the risks. Investors looking for total return investments with a long-term time horizon should strongly consider IIPR. The sell-off has pushed the dividend up to 3.2%, which is extremely attractive considering the market conditions and dividend growth potential. I think it is highly likely that shares are trading above $300 by the end of 2023, and the current price below $200 provides an attractive entry point for investors. Like I said, I will have a link to this article so you guys can jump in here and read the full thing, because I certainly want to make sure I keep it moving over to this article that has 3 Warren Buffett dividend stocks to buy in February. Of course, AbbVie happens to be the first one they mention, which, as I just mentioned, is one of the 2 stocks that we actually removed from our portfolio. So thought it was funny to see them first on this list. But one of the other companies here mentioned is Johnson & Johnson, who is a dividend king with a positive major transaction on the way. Our man Warren Buffett over here looking all fresh, you know what I'm saying? But if we come over here, you can see Johnson & Johnson claims one of the most impressive dividend track records among the stocks owned by Berkshire Hathaway. The healthcare giant is a dividend king with 59 consecutive years of dividend increases. Its dividend yield stands at close to 2.5%. And a major shakeup is on the way for Johnson & Johnson, but it should be a good one. The company plans to spin off its consumer health business as a standalone entity. J&J will be left with its pharmaceutical and medical device units. This move will leave Johnson & Johnson with a lower dividend payout than it has now. However, investors who hold on to shares of both companies after the spinoff should receive at least the same combined dividend as they did before the transaction. And the best aspect of the spinoff is that it could cause J&J share price to increase. The pharmaceutical segment is the company's biggest growth driver, followed by the medical device segment. Buffett has owned Johnson & Johnson stock for a long time. He and other investors could soon have more robust growth in addition to a solid dividend. So it looks like Johnson & Johnson, who you can see is kind of here in the middle of our portfolio right now, up about 10.70%, which is still really good. I know you guys see these numbers up here, and when you have something to compare it to like that, it doesn't look good, but 10% is still really good, especially with our current market. You guys remember this article at the beginning, right? Talking about how bad the market is getting beat down. Well, the fact is we are still in the green. We're still doing well, and a company like Johnson & Johnson might be a great buying opportunity, as well as innovative industrial properties, and pretty much anyone else in our portfolio. I'm not getting rid of anyone here in our portfolio, at least anytime soon. Of course, there might be some upcoming news, some changes that take place at one of the companies, similar to what we saw with AT&T, and if that does happen, well, we can just cut that slice of the pie, get that bad boy out of there, and either we leave it how it is and we'll share that percentage among the current 9 companies we have in our portfolio, or we can decide on a new slice to add, a new company, a new REIT that we might want to have in the mix, or maybe we add an ETF or an index fund. I'm open to your thoughts, your opinions, so feel free to leave a comment down below if you have any. And while you're down there, if you haven't yet liked this video, smash that subscribe button so you guys can stay up to date on our updated video that we do every weekend. I didn't do it this weekend because it's the first, it's that 1 year anniversary, so figured we're gonna miss it for once. But usually every Saturday or Sunday we have our dividend portfolio, as you can see here, as well as our growth portfolio, which, man, it is getting beat down pretty badly right now, but it's all good because that means we get access to all of these cheap stocks that we can continue to buy at a very nice low price. And that's also the reason why we're doing this dollar cost averaging approach, because had we just spent $1 trillion and $100,000, you throw it all in at once, if the market tanks, if it crashes, well, you are getting hit badly. However, if you spread out that $100,000 over the year, well, you're able to benefit from the lows as well as the highs. And as a result of us continuing to contribute every single week, despite our companies and the stock market doing very bad or doing very good, well, we are still up over 5% at almost 8%. As you can see here, 7.93%, which, like I said, gives us a total gain of $95.46, which gives us a total current value of $1,994.15. And of course, I wanted to dive into my earned dividends and let you guys actually see, where did I get this $55.51 from? Well, majority of it came from our REIT, Newtek. Newt is the ticker symbol, NEWT, Newt, and that's $15.28, killing it compared to everyone else here inside of our portfolio. After that, you have Verizon, which is at $6.54, followed by our next REIT, a Realty Income Corp, at $5.57, and then Coca-Cola at $4, and so on and so on. Our newest company that we added to our portfolio, which is Innovative Industrial Properties, is down at the bottom at $1.13. And I will note, AT&T, if my memory serves correctly, was actually somewhere in the top tier while it was in our portfolio. So it was giving us fairly good dividends. But the stock was just getting killed, and we knew the dividends was going to be cut even more than what it currently was. We cut them from the list as mentioned. So, hey, if you are someone out there who's balling on a budget, you ain't got much money, you're like, man, I'm trying to invest, but I want to invest with only a little money, or should I even do it? Is it even worth it? I mean, hey, you can decide for yourself. Throw your money in your savings account and see how that works out for you beyond even 1 year. I don't know of any any savings accounts that pay you 7.93% in 1 year. But again, this isn't even about the short term. 1 year is short term. that ain't nothing. We're doing this for multiple years. So we have a nice, fun, exciting journey ahead of us. And if you want to join the journey, definitely subscribe to the channel. And like I said, much appreciation for watching. Smash that like button. And don't forget to check out the links down below, because you can also start to grow your money, start to invest. Get your hard-earned cash to work for you. That is the goal. That's how you do it. Because if you just go out there and spend all your money, I promise you, you will not get to that next point, get to that place where you're trying to get. And I'm not saying this is going to make you a trillionaire or billionaire. I mean, hey, if we had a couple of zeros behind our money every week, let's say that was $2,500 a week, we would be killing it right now. This would be pretty nice. I will say that. But yeah, that's not what it's all about. This is really, like I said, trying to get you guys into seeing, because as they say, seeing is believing. So I'm letting you see that you can start with as little as $100, $25 a week, and just be consistent and persistent, and don't give up. The market might tank a bit, might crash a bit, but like I said, look at that as you being able to get a deal. But all right, my friends, you already know what it is. I gotta keep it moving, but hope you guys found this video motivational, encouraging, helpful. If you have any thoughts, any suggestions, any companies that you're thinking, oh man, you should get rid of them like ASAP because something's about to happen, kind of like AT&T, let me know. Comment down below. And like I said, while you're down there, check out M1 Finance so you can start your own dividend or growth portfolio with as little as $100. Start contributing $25 every week and grow your portfolio up to almost $2,000 before you know it. So I'm gonna wrap it up there. Much appreciation for watching, but you guys already know I gotta keep it moving. But I'll see you in the next video. Peace.